Welcome to today's webinar event, traders. I'm your host, Sean Kozak, president and co-founder of NeuroStreet Trading Academy, and this is day one of a two-day trading summit. For those of you that are joining us for the first time, welcome. Sit back and kind of take it all in. We've got lots of information to share with you. And for those of you that have been in one of these events before or any of these summits that we've put on, it's day one of day two. So at any given time, if you're not able to stay throughout the entire event, or you need to leave and then come back, or you'd like to, watch some of it on a recording, we are recording this. We are going to send this out via email after the event. And the fact that you're here and registered automatically registers you for day number two. So you do not have to do anything. You will receive an email and you will be registered and automatically notified for day two. So before we go any further, can any of you guys tell me if you find that you use order flow in your trading? Are you an order flow trader? Do you look at order flow? Is there any type of order flow that you use in your analysis? I'd be interested to see if there's any newbies in here. If you are completely new to order flow, type the word new in the chat box. I would very much appreciate it so I know who you are and what your experience level is. Okay, so I'll give you guys a check. And while you guys are doing that, please don't forget that if you have questions, you can type them in the chat box at any time. And need to cover a quick disclaimer before we get into the material. George says Delta. Armin says he's new. George says Delta again. I use OF in your software, Frank says. Fantastic. Martin says no, he's new. Excellent. I remember that when I first got started in order flow, I was overwhelmed. And we're going to talk about that here today. We're going to declutter the noise. If you have any questions on the disclaimer, please take a second to read this so we can carry on. And we will definitely make sure that you are aware of the risks associated with the business. Okay. So I have a motto. I like to lead with this so that you understand why I am here. I am the co-founder of a trading school. We started off small. We became large in the space through all of our years of running trade rooms and selling trading indicators, and we just love what we do. We've got a great team, and it has definitely been a fun ride so far. But there comes an understanding of the industry, and the industry is that we are in the financial markets, and the financial markets mean that it is very challenging for those to succeed when the odds are stacked against those that do not know what they're doing. So I'm here to give you education and to teach you things that I've worked with thousands of traders all over the world. I'm not here to give any fluff or snake oil, no false hopes. Trading takes work, trading takes commitment, and trading takes discipline and the right tools. So that means I'm here to show you some of the tools, right? We've got a tool set. We've got lots of different indicators. Some of them are core products, and some of them are add-ons to the systems that we trade. And the goal here is to help you understand how to define a signature trade for yourself. You may trade some of the system setups that we trade, or you might even find something in today's event that really sparks your interest and hopefully teaches you something new. If you can leave here with something, just one thing that can help change the way you read the markets, I have done my job as an educator, okay, and an influencer. The goal here is to help you practice and learn exactly what other successful traders use. Okay, and that's exactly what I want to just leave this here today, is to tell you that there's a lot of people in here. I know a lot of your names by first and last name, and there's also new guys in here. Everybody starts somewhere, and a lot of this information is being used by other successful traders. Now, were they always successful? No. Do they face struggle? Yes. It's trading. But the good thing is that it works, okay? And so what we're going to do here is we're going to teach you some really, really important stuff. It is a two-day summit. It's jam-packed with information. That's why we break it down into two events. And today we are focused on order flow. We're going to talk about what the data is, what we're using to export the data, or basically look inside the data. I want to talk to you about the order flow process. This is what was really overwhelming for me when I first got started, and it still can be overwhelming for a lot of people because we tend to put an emphasis on stuff that, in my opinion, really doesn't matter. Okay, we're going to look at tape aggression, talk about what that means. We're going to look at supply and demand through the time and sales, not supply and demand through levels. We're going to talk about time and sales supply and demand, what that means in the tape. Talk about net delta, what net delta is, how we look at it, what it can be used for, how we use it towards better execution. Trade signals, this is a big one. A lot of traders like red light, green light because it's easy. It takes away some of the decision making. But more importantly is, why do we need to rely on trade signals? Well, it doesn't necessarily mean you need to trade every single signal. It means you need to understand that the human brain, myself included, cannot do what computers can do. And we need the computers to run an algorithm to determine when things are happening in the time and sales. So we cannot process that physically, mentally on our own, and we need a computer to do that. And we're going to talk about that here today. Now, we're going to be running a promotion on the Print Profiler software. The Print Profiler software is our flagship order flow and volume profile tool set. And we're going into the holidays, so we have, you know, these savings. We'll extend them to you. So just note this: if you are interested in some of the stuff that we're using or that we teach in these events, you can get a discount due to the event. So that being said, how many of you guys started looking at just random charts? Do you remember back in the day when you first looked at a price chart and, you know, you probably loaded a 5-minute candle or even if a daily time frame, you opened up your platform and it was like, you know, you had a time-based chart or a, you know, maybe even a range-based chart or a volume or a tick-based chart. But the point of the matter is that you have an open, a high, a low, and a close. Now, here's where a lot of people don't understand what's going on. Price charts are strictly just a representation of what took place over price and time. So let me kind of draw something on here for a second. Let's pretend you've got a scale here and you got prices, right? All the way to the upside. Expensive prices, cheaper prices, right? That makes sense. And then you've got time. Okay? Time is unfolding. And here's what people don't understand is that all a candlestick chart does, or a range chart, or a Renko chart, or any chart at that matter, is it tells you the high and low of a price bar, the open and the close. It's just a way for us to read what took place between a specific window in price over a specific window in time. Now, that to me is useless information. You say, Sean, well, why do you teach it? Because we need to have something to start with. If we know that a price chart is strictly there to read data coming from the exchange, it's representing the decisions of human beings across the world. Everybody and their dog, from the retail trader sitting in his basement to the hedge fund manager down on Wall Street, they're all looking at price charts for the most part, making decisions as to how to read price and time. And they're using a whole bunch of different indicators to make decisions. But a price chart is still a price chart. So that kind of leads us to this one question. How do we know what's going on inside of all this noise, right? And that's a really important question, because once you realize that there's another picture to be told in here, rather than just blindfolded data, we can really start asking questions like, what do you mean there's data inside of the data? And how do I use it to my advantage? Because that's what traders need to do, is they need to use things to make it easier for us to make a decision so that we can trust our abilities more and have a way to ascertain probabilities to the best of our ability. Well, that's exactly why we have order flow. Now, order flow is as simple or as complicated as you need to make it. Let me repeat this. Even myself made it overcomplicated when I first started. I got real excited about all the bells and whistles, the numbers, the flashy signals, the process, all of it. But as you become more experienced and you start to realize that order flow is always taking place, no matter what happens. And it's our job to make a decision as to when to use it to our advantage. Because no matter what, you cannot have an auction without order flow. You need buyers and sellers to process trade. However, it doesn't necessarily mean that order flow is relevant the way that we need to trade it, or the way you need to trade it, or when used with some of the other tools that you're using in your strategies, okay? So what I want to do is I want to talk about how the order flow process unfolds. On the left, you're seeing a number 1. This is what we call a dome or a price ladder, you know, depending on the platforms that you're using. This is a NinjaTrader example. But for the most part, it starts in what we call inventory. And inventory, okay, inventory is here. Now, the reason we call it inventory is because there's going to be a whole bunch of traders placing orders up here, and there's going to be a whole bunch of traders placing orders down here. And then you get what we call the inside bid and offer, which is where the orders execute at the bid and the ask. So you got a bunch of sellers above price. You got a bunch of buyers below price. Okay? And what ends up happening is there's a lot of discussion. Okay? There's a lot of discussion around market manipulation and spoofing and ghost orders and iceberg orders and ice blocks and whatever the case may be. Heck, it doesn't matter. I'll explain why it doesn't matter. Is there anybody in here that feels that your infinite wisdom and your resources by your own computer desk has an influence over Wall Street? Give me a yes or no. Just, and I know the answer to that, but just humor me for a second. Does anybody in here feel that they have the power to move the market, or at least make an impact so that a hedge fund says, hey, I better call John Smith in his basement because, hey, he's making a decision right now? Exactly. So it doesn't matter if Goldman Sachs wants to lift 50 contracts, or if the random, you know, stay-at-home mom wants to pull her 4-contract limit order. It doesn't matter, because sometimes it could be manipulation. Sometimes it could be you and me just pulling 5 contracts because somebody called us on our cell phone and we don't want to have a resting order when we're distracted from our computers, right? Inventory is inventory, above and below price. But once an order is executed, then the story changes. Okay? The story changes when there's a timestamp in the market. A timestamp in the market is referred to time and sales. Time and sales is like going to the grocery store and buying chocolates at Christmas. You go up to the counter, you get a box of those nice fancy gold wrapped Ferrero Rochers. Who in here doesn't love those? Can't wait for the cheat meal this Christmas. And you buy them. And they give you a receipt and they hand you your $5 change. They say, thank you, Mr. John Smith, for your time here at the store. And here you go. You now have a record of transaction. Well, the financial markets, or the time and sales window, is like a million people going and buying chocolates at a whole bunch of different price levels. Nobody knows when they're going or coming, and they're just buying and selling the market. The time and sales is a very, very rapid environment. It is constantly flowing with information. It is a very overwhelming piece of the platform that can completely confuse new traders. It can be very powerful when used correctly, but it can also be very dangerous when misunderstood. So the whole reason we take this information and we move it into the charts is so that we can use the inventory that became time and sales executed order flow, and we can start putting it on the price bars so that we can start to put numbers to the picture. And that's the order flow process. What we do is we take all of the information, okay, all of the information that took place inside this information here, the amount of contracts, the price level, the time it took place at, and we move it to the candles. And then we assign the order flow to either the left or the right side of a price bar. And there's a reason for that, because we need to understand who's buying and who's selling. Right? Who's buying and who's selling, and at what quantities, and what type of an impact could that have over price direction and trade location. So let me kind of go to the charts here for a second and show you what that looks like. Okay, this is a chart of the ES 0320 contract. You'll see here that I've got the dome, and you'll see there's a bunch of orders sitting here in the dome: 258, 319, 472, 395, 404. Okay, what if I just did that and put an order here? What if I did that and put an order there? Now I've got orders above and below price. Ding dong, ding dong, I hear my phone ringing. I'm going to pull my orders because I don't want to have orders sitting on the chart. Did I manipulate the market? No, I pulled my orders. Okay. So why am I explaining that? Is because there is a whole lot of orders that can either be executed or pulled at a random whim. Therefore, we cannot rely on this information to be a really good bias detector or an influence to what the market could do. Now, you're going to see here that we've got this pretty fancy looking tool on the right-hand side. This is a tool called the inventory gauge, and the inventory gauge does exactly what the time and sales, or sorry, the Superdome does. So instead of using a dome, you can see here 233 at the top. Isn't that 233 up there? 347, 347. 487 is the largest asking price level by sellers in this environment. It means there's 487 orders parked at that price level. Could it change at any given time? Yes. What about this 497? You see how it just shifted? You see how fast it is? Oh, back to 522. That's the problem with order flow. Traders don't understand what's going on. Well, what if somebody down in Chicago has a plan to move $5 million worth of the ES contracts over the next 3 days? And he has to do it at a price level that's XYZ better than XYZ. And that means 500 contracts now, 500 contracts later, 2,500 contracts later on. Could he break all that up? Sure. That's why you see such large orders on contracts like the ES, and even in other markets. It's all relative to the market. The point of the matter is, how does that really influence our decisions? It shouldn't. And therefore, relying on the dome, unless you're an order flow trader that specifically reads price ladders, it can be very complicated. Now, let me ask an audience poll in here. How many of you guys find you're able to read through picture memory rather than numerical memory? Give me a P or an N if you find that you can easily visualize pictures as opposed to a bunch of numbers coming at you. What do you guys feel is easier to read and understand? Ah, right. Okay. So let's get rid of this. And let's move the dome over here and get that out of the way now. So now we've removed the need for the dome. Okay. So now you can see that inside the inventory, we have an inventory button that says inventory on or off. If you want to see the inventory, you can. For the most part, it's what we call intent order flow. It's the intent of buyers and sellers, right? Nobody really knows what's going to happen. We just know that there's a bunch of sellers above price, a bunch of buyers below. We'll have to wait and see what happens. So let's turn it off. Let's talk about the numbers. If we got a whole bunch of contracts coming in here and you see this going up and down, or just down because it normally just goes down and it's flushing the market, tons of orders, or a breakout happens, or a big surge of news comes in, right? You get a bunch of orders coming in. How many of you guys think it would be easier to learn how to read the chart with the numbers as opposed to trying to watch that with a whole bunch of numbers just coming in like a floodgate? Give me a yes or no if you think the chart is easier to read than a number ladder like that. Give me a yes if you feel that that makes sense to you. The chart. So we don't need the time and sales anymore because that's why this chart was existing. That's why we use an order flow chart. Now, you got a whole bunch of numbers. And that's where traders get confused. It's like, okay, well, I've made it simple, but now I still feel confused. I got numbers all over my chart. What do I do? Show me how to make money, Sean. Okay. Well, let's start breaking this down a little bit easier so that we can make a little bit more sense of the data. We've now gotten rid of the inventory, the time and sales, and let's look at the charts. Well, you need to understand what the numbers are telling us. Remember this, that's the time and sales data. So when you look at time and sales, we just got rid of the ladder. We're putting time and sales on candles. So when you look at that, we need to be able to read what that's telling us. So I like to call this, some people call it, footprint charts. Some people call it order flow charts. I like to call it tape aggression because we're measuring the time and sales, which is the tape. We gotta kind of strip through the marketing jargon here and think about what is it really telling us. I think that really helps build better belief systems around why we look at things. And it also helps us learn the proper way in which to understand the information. We're measuring the time and sales. We're not measuring footprint charts or order flow charts. It's time and sales, okay? So when we talk about time and sales, you either have buyers at the bid, sellers at the bid, buyers at the ask, sellers at the bid, okay? Or maybe I messed that up. Ask aggression, bid aggression. Keep it simple. So the concept is when you have bid order flow aggression, bid order flow aggression is on the left side of your price bars, okay? Bid order flow is when sellers are going to the bidding price. When you have ask order flow aggression, you have buyers going to the asking price, okay? So let me kind of explain this in an easy to read environment, okay? In a time and sales, I've got to turn that back to black, okay? In a time and sales, you got one big ticket with a whole bunch of information going like that. You got numbers, okay? Well, that's buyers and sellers just flooding, going down super fast, okay? But if we take that information and we splice it into a price bar, pretend every price bar has two sides to it, okay? Ask is always above price, bid is always below price. So if we have the time and sales saying that there is a bunch of aggressive buying taking place, what's going to happen is buyers are going to rise to the asking price, okay? However, if you got a bunch of sellers that are aggressively going to the bidding price, we're going to have a bunch of sellers coming down and attacking the bid. It always operates on a diagonal concept. Why? Because remember, in the inventory, you got buyers and sellers above and below price. That's how the ladder works. So what we're doing here is now we have the ability to start talking about measuring the strength of that. And this is where I want to kind of stop for a second and kind of go into the power of using the print profiler software, okay? So, because this is a boot camp, I want it to be really valuable. Okay, let's go into the indicator for a second. Inside the indicator, we have the ability Okay, let's just move this over for a second. We have the ability to tell the software, okay, remember we got two sides to every candle. Let's say I've got, I don't know, 202 contracts right here. And then you can see I've got 723 contracts right here. Well, let's just kind of put 212 here and 723 here. Okay, let's just kind of take a look at that. If you take 212 and you multiply it by 3, you're going to get 636. So this is greater than 3 times 212. Do you think your mind can physically do mathematical calculations as the speed of order flow is coming into the market? No, it cannot. That's why we code software for that. Look at 453, multiply that by 2 or 3, you're going to get 1,300. Okay, we can create a threshold, okay, a threshold that measures the strength of the buyers versus the strength of the sellers. Look at 17 to 108. That means that 108 is greater than 3 times the sellers coming down right now. That means the amount of buyers going up right now is 3 times greater than the amount of sellers coming down. Our software measures the threshold against the bid and the ask aggression, because I want to know that if the buyers are going up, at how much are they going in terms of the strength of the order flow? Does everybody understand that? When it's white, and I've done white and blue because I've had some requests with, you know, traders. Some traders are colorblind and stuff, so I tried to get away from the red green. I put blue and white. You got 1166, 2969. That means as the sellers came down, they were 3 times stronger, or 2 times, 2.5. I think I have it set at 2 times or 2.5 times. You can set it to 3 times, 5 times. That means that buyers need to be 5 times greater than the sellers if you want to see the imbalances. Okay. And that's how we can use the power of measuring time and sales data, because it's really important to see the strength of buying or the strength of selling rather than just having price go up and down. Now, let me kind of explain this in a little bit more detail. Some traders don't like to look at numbers. I don't blame you. I like to keep things looking clean and simple. So one of the things that we can do inside the indicator is we can go in here and we can turn on imbalance dots. Okay. And then what we can do is we can then understand that as prices are going up, if you want to turn the numbers off, you can, and you can basically see that the yellow dots are where, or you can change the colors for whatever preference you have, but any dots on the left side of the price bar are aggressive sellers times 2.5 threshold to the buyers. So you can see here that the buyers were 2 times stronger coming up here, 2 times stronger coming up here, 2 times stronger coming up here. Okay, instead of numbers. Visual traders like visual cues, some traders like the numbers. It's really up to you. The goal is to understand that you have tools to make reading very complicated information difficult to the human eye easy. Okay? Now, before I go any further, does everybody understand that? Give me a yes. Take a second, pause. It's a lot of information to take in, right? It's a complicated subject. If everybody was day trading order flow, we'd all be millionaires successfully, but that's not how the market works. Got to learn this stuff. It's fun to learn. So I want to talk a little bit about how that can be useful, okay? So let's just say you've got, and I'm just going to use random price levels for a second. I'm just going to put a range in here because I'm not really trying to teach you specific strategies right now. I'm trying to teach you what order flow is doing and how it's used and et cetera, okay? So let's just connect the highs and connect the lows of this range, okay? Let's go back over here into this environment up here, the highs today. This was the highs on the ES, okay? Now, I want you to kind of pay attention. We're going to just go slowly here. And we can see that that was a resistance level because we sold off from there before, right? We came up, we came down. So let's just label this and let's just coin this as resistance. Now let's just right here and let's just label that as resistance, okay? So we know that that's resistance. So if we get up here, I want to pay attention to what's going on in the print. Take a look at all the blue text. If you want me to put dots on here, I can if it makes it easier to see them. Black dots on the right, yellow on the left, okay? Now, if we go in here, you can see that as prices are rising, watch when we go up one more bar, okay? What's happening in the print? There's less buying going on. You can see the blue is disappearing. You got some white in there. What about that? Okay, what about that right there? You're starting to see a little bit more white, right? What does that mean? Like, aside from this and this, you would just say, well, that's just, it's a doji or it's a down bar, or oh, we're getting a little bit of a pullback, or some traders all have a bunch of random stuff they say to themselves. You say sellers, yeah, but nobody really knows if they're going to sell at the resistance or they're going to take out the highs or if it's profit taking. All we know is that we're getting a bit of retracement from the highs. Well, that's what we can use order flow to see, okay? We can start to see that the strength of order flow is coming in to the tape. Now you're saying, okay, wait a second. We've got an up bar. What about that? What are we seeing in those three candles right here? We're getting a lot more sellers coming in. A lot more white showing up on the left side of the bar. What does that mean? Let's not forget that the whole purpose of these bars is to measure this information as it's coming into the market. Okay, so when orders are being executed, what this is telling us is we're getting a whole lot more sellers coming in here at resistance. That's what that is telling us. And so if we were to watch what happens on the next bar, price starts to drop. Now, does that tell us that it's going to continue dropping or that it's going to give us a huge trade? No. This is the order flow process. The whole concept of the boot camp is to explain order flow, okay? Teach you everything I know about order flow. And so what we can start to do now is we can start to start thinking a little bit about how to make this easier for us to trade, right? How do we start to use this to our advantage and make it a little bit actionable for us to start executing trading decisions, okay? Because like I said before, order flow alone can be rendered useless unless used in the right context at the right locations, because you got order flow happening all the time, right? You got order flow happening all the time. So let's kind of go in and talk a little bit about how we can measure supply and demand from the print. So you'll notice here that I've put some zones on the chart. And if you look at those zones are created around the dots. They're also created around the numbers that are highlighted. The reason we call supply and demand from the tape different than supply and demand from, say, levels software is because it's calculated based off different information. So when you look at supply and demand analysis like this, we've got several supply zones, but they're very tiny. Now they can be as big or as small as you set the software to be. So an example like this is I've got it set to 4 price levels. So I need 4 levels of aggressive selling in the tape and a bar to close for us to print a supply zone. But you can see what happens when price gets to those areas. Price reacts. Now, supply and demand from the tape can be very, very good for scalpers and day traders. I don't think supply and demand on the tape is very evidently strong unless you're looking at really big time frames and you set the thresholds very differently. But for day traders, if you're looking at scalping with very tight stops and you're looking to maybe combine these areas around other areas or indicators that you're trading off of, it can be very, very, influential to the outcome of your trades. Another example would be a demand level like this. You can see that the demand zones are basically wrapped around the dots or the imbalances on the buy side of the candles, right? And when price gets into those areas, it's because it's aggressive buying at those price levels. So when we start talking about measuring the strength of the order flow in the tape and we start wrapping supplier demand zones around it, that's exactly what this is for. So let me kind of go into the charts for a second and kind of go in and start turning little features on here. Let's go in here. We have a zone section. And there might be some broken levels in here. Take a look down here. Okay, these are broken zones that were created from prior levels of supply or demand. Now you'll notice here how I have it set to 4. If I go into the indicator section, we have the ability to go and make it a little bit more less restrictive. Let's go to the zone display section. You'll see here it says minimum ticks. I can set this to 3. Okay, hit OK. And by definition, it should pick up different zones. It should pick up zones that are a little bit more responsive. We can control the strength of the tape. Now, what's really interesting is that by definition, if we know that we've got resistance up here, do we really want to be buying demand levels where big sellers are expected to step in? Think about it. If we're taking data from the tape, time and sales, it's a timestamp based off of executed order flow. And we know that executed order flow near resistance created that supply zone. We got all the way up here. What happened? Then we got all the way up here, and look what happened here. This little blue zone is a false breakout. A lot of buyers got trapped out there because it was met by aggressive sellers right away. Now, the reason this is super important is because it's all about location, location, location. If we go in here, I wouldn't be so concerned about this demand zone down here at 3201.50. I'd be more concerned about if this candle closed like this, and I know I'm at a big level of resistance, that's telling me that supply is stepping into the time and sales. When price gets up to that level, to the tick, goes right back to that level, to the tick. What happens at that supply zone? Drops right back out of it. Remember, we're at the top of the range, going into the middle. Price comes back down. Price comes back down. Do we really want to be buying demand at the top? No, it's going to blow right through. And one of the things I find about supply and demand levels is that depending on how you trade, you might not be comfortable just taking trades based off tape data because it's very, very tiny price actions. Price can go through 3 to 4 ticks very quickly depending on the market. But let's say you have other indicators up here that is telling you that we're at resistance and we have another reason to sell. The tape data can be very, very useful for going into the data and seeing what's taking place. Down here, I wouldn't be interested in supply at all. Okay, I wouldn't be interested in supply at all. Up here, I wouldn't be interested in demand at all. because it's at the wrong side of the market. You can see how things fail in the middle. I don't like taking things in the middle. Okay. Now, to me personally, I find the tape to be too responsive. And that's just me. A lot of traders swear by it. They can't trade without it. So it's a preference. Okay? It's a preference. Let's go in here. Turn off the zones. Let's go back into the data. Right here, and let's do that. Yeah, exactly, TJ. TJ says the dome can be sometimes too jumpy, or order flow can be blowing through at certain areas. Yep, absolutely. And that's why I think combining this type of information, okay, with other areas of interest is absolutely critical. Okay, so what I'm going to do now is I want to transition over from looking at zones to looking at what we call delta. Now, delta is either reading positive or negative. And the reason I spend so much more time on the deltas as opposed to all the independent levels of price is because delta gives me a net relationship of the entire bar's order flow equation. So rather than just relying on, let's say, a couple price levels, or, you know, a couple here or a couple here, right? I get to take all of the buyers and all of the sellers, and I get to take the net sum of them, which gives me a better total of the overall sentiment of that price bar. So when we talk about net delta of positive 292, what we're doing is we're subtracting the bid from the ask, okay? And we derive ourselves at 869 contracts minus 577, which leaves me net 292. Well, net 292 tells me that the net sum of this price bar had positive order flow in that environment. Does that mean that it's going to go up completely? No, it just means that the order flow equation was net positive. Okay. Now, on the sell side of this, net negative. It's the exact same thing. The only thing is that you do the math. And if you have an abundant amount of sellers, okay, you're going to have net negative delta. Now, why do you think that delta could be a better read of sentiment as opposed to order flow in the bars? Anybody have an opinion on that? Does anybody here have a thought process on why we would look at net delta as opposed to order flow in the candles? And I'll tell you why. Because a lot of times what's going to happen is net delta gives you a bigger picture view of what's taking place at that environment. Let's go back over here to this example. Okay, back up to here. Okay, let's say we're coming up. We're coming up to that resistance level, right? You can see that as price was rising, delta is positive. Wait a second. Now we got something worth discussing. We've got prices going up, but on negative delta. What do you think's happening right there? That's the fun part about using order flow delta as opposed to looking at all the price bars. Anybody have a thought process? Think about this. What about this candle right here? You got prices going down on positive delta. You got prices going up on negative delta. Prices were trying to go lower. Buyers are stepping in as prices are coming down. Prices are trying to go higher, right? Jody says absorption of buyers if net negative delta on an upward move. Yeah. More importantly, it's not normal. right? It's not normal. So when you see this, that's when our thinking caps should be, that's not normal. We need to start paying attention to what's about to happen here. Now, let me ask you this. Do you think the human mind can add all of that detail up, okay? As the market's coming up, you're doing all the mathematical equations. Prices are coming up. You're adding all those numbers together on your calculator to come up with that. By the time that's happened, the market's closed. Right? We've lost the entire day because that's not how the mind can do. You can't do business. That's why we need a tool like this to be able to understand how to use that to our advantage. Now, what we should be doing is we should start trying to make things a little easier for ourselves and realize that, hey, we've got something that doesn't really make sense here. Prices are going up, negative delta. Then we start seeing delta increase. So look at the 920 to 1745. Do you notice how the negative net delta got bigger at the highs? That means the selling delta is increasing. Now we got some buyers up there. That's understandable. Sometimes you're going to have price trying to break out. And then all of a sudden we see an increase in delta as price rolls over. So I want you to talk a little, I want to talk a little bit about this pattern. Okay. We had an increase in sellers. We had an increase in sellers on the pivot. What do you think all these buyers are doing up here? They're grabbing the oh shit handles and they're stuck. Okay. Now, how do you know that's going to happen? You don't. That's why you have to rely on delta. You have to rely on an area of interest. You don't just rely on delta alone. You do not just rely on order flow alone. You do not rely on it independently unless you're specifically a master of order flow. If you're somebody like 90% of all other traders that is looking to increase their edge, it is critical to take the order flow data and put it to use at areas where it matters. Okay? So one of the things that I like to do is I like to rely on trade signals to help make that process a lot easier. Okay? So let's kind of talk a little bit about what that means and what that looks like. Inside of the indicator suite, we have what we call order flow signals. And this kind of bridges on the delta. It also bridges on the order flow sequence and also the way in which orders come from the time in sales. Now there's 3 signals that we've coded in here on the order flow side, and we do have plans to add to this, and we've got some other development discussions, but the more important part is what these signals are telling us. Okay, first and foremost, we have a trap trader signal which measures exhausted order flow at the highs or lows of price. Delta divergence looks at price and net delta and when they diverge from each other. And then we have a combined signal that bridges the two together. Now, the reason we code signals for this is because it is physically impossible for our human minds to see this in the market as it's happening. So let me kind of explain what it looks like. When we have exhausted volume, it's when buyers or sellers try to drive prices lower or higher, but they can't, and they get stuck at the highs and lows of price exhaustion. A lot of times you'll see these on pullbacks or on the beginnings of reversals, and you really don't know if it's going to be a directional shift unless it's at areas of interest. So you're going to have exhausted volume happen all over the place, or price would not turn from area to area. But what we need to see is we need to see declining order flow at the highs or lows and price getting stuck in those locations. Now, we call these trapped traders because really buyers and sellers are trapped at the opposing side of price. Now, on the other side, okay, well, before we go in here, let's take a look at that, what it looks like on a chart. Okay, let's do this. Let's go in here, turn net delta off for a second. And let's go in here and turn on the indicator signals, trap traders. Okay. So let's just go down here to, it's interesting, I took this trade today. It wasn't a trap trader signal that I was trying to trade, but it did happen. So let's use this example. Okay. Let's turn on the print. Okay. Let's turn on the print. And let's go into this bar for a second. Let's just analyze the numbers. Okay. When price was coming down, I want you to pay attention to the math. Orders were still increasing from 556 to 1117. They were still getting bigger, but then they started to drop again. And then it dropped even more. 1, 2, 3 declining orders at the exhaustion point. So what we're doing in the time and sales is we're measuring the amount of exhaustion, and we can set this to 4 levels, 3 levels, 10 levels, depending on if you're looking at larger time frames, right? But normally 3 is the sweet spot, right? If you want to increase it to 4, you could, okay? And then as price trades up and closes, this trap trader signal will appear on the chart. Now take a look here. You also got a trap trader short signal, the price candle above it, right? I mean, how do you know which signal you should be trading? That's the question that you should be asking. Not, hey, Sean's got nice software and we should buy it. It's, how do I take the signals and put them to use for me to make money and limit risk? Well, let's talk about this sell signal versus the buy signal. This sell signal went 1911, 856, 333, okay? So that's important. Prices, as prices are trying to get higher, they're getting higher on less and less and less buyers. Well, the human mind cannot see that in the time of sales or even when it's happening. It's happening so fast. Well, why would we want to not pay attention to this and pay attention to the long side? Well, because it has everything to do about location. Where are we in the range? We're at support. When buyers are expected to step into the market and we start seeing net delta coming in here at the bottom, look at this. Look at this trap trader. This is a perfect example of price trying to drop into support on negative delta, and they still couldn't drop it down. Price could not drop on negative delta at support. That is a huge indication that the buyers are absorbing the sellers and they're getting ready to rip it to the upside. Okay. You can see it's like we had, it's like random things that take place that are out of context. Does everybody see that? We should not be paying attention to sell signals when we are in areas of support, because that is out of context. You're going to see it sometimes. This is in context, in the right location. Let's go over and talk about a different example, a different signal. I want to talk about delta divergence. Normally, you have a momentum oscillator. Let's say this is a price chart, right? And you got your sub panel and you got momentum rising, and so normally what happens is you got, people are analyzing price going higher, momentum going lower. You say, well, that's divergence, right? I know that's price is going higher, momentum is going lower, that's divergence. What we do is we look at it from a different perspective. We're not using momentum. We're using price but we're using order flow, primarily net delta. Prices are going higher, 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 and it reverses after making higher highs in price on negative delta. So prices were able to go higher, but on negative delta, and reverse. Prices going lower, lower, lower low, price reversed on positive delta. That means as prices were going lower, we reversed on positive delta. As prices were going higher, we reversed on negative delta. That is what we call delta divergence. It can be very good, but here's the thoughts on this, because I'll give you decades of experience. Delta divergence is a very fast signal. You get a lot of them. So what I normally tell traders is if you want to use delta divergence, I would combine them with the trap trader, because now what you're doing is you're stacking delta divergence and exhausted volume on the same bar. And it's kind of like running two algorithms inside of your order flow software to identify really, really strong environments where price can be very powerfully influenced by exhaustion and net delta transitions. Okay, so let me give you an example of what that looks like on a chart. Okay, if I go in here and I turn off the trap trader and I turn on the delta divergence, you can see you're going to get a lot more signals. Okay, now if I go in here and turn on combined signals, let's go here, turn delta divergence off, and let's find that you're going to have less signals. You're normally going to see them at key areas because it's when price and order flow mix. I'm going to turn delta off for a second, a little easier to see, easier on the eyes. Turn off the support, let's turn off the resistance. And let's just kind of go down here to the lows, right? Take a look at this low down here. This candle right here is a combination of two order flow algorithms running inside of the time and sales. And if we separate the data and we go down into it, what's happening, let's turn net delta on again. Prices are going lower and reversing on positive delta, but at the same time, we had a declining sequence of order flow inside the lows, which is an exhaustion of volume, which is interesting enough because it's a higher low retest before they rip it up. And then you can see where the buyers step in and you can see the aggression in the tape. That's what we call a flush and go or a stop run, or it's not so much a stop run because stop runs hit out the lows, but it's normally what we see, an exhaustion lift pattern. And how can you identify that in other areas? Well, it's very easy to see when you just look at any past signals that created big moves. Okay, let's take a look here at the highs right here. This one right here created, okay, this one created right here. Price is going up, came down, higher high, reversal on net delta. But the question is, what happened in the volume? Well, if we go and we take our magnifying glass out and we go into the time and sales, we can see that we had 4 sequential declines of order flow. $10.13, $9.04, $3.44, $30. How the heck can a human being count that and still try to trade at the same time? We can't. But we can use the signals to help us identify that, hey, this is some pretty important information in areas of interest. So when you start taking this type of data and you combine it to areas like ranges or trends, and you start looking at areas where you know that this was a value area low this morning, and you know that that was a value area high in market profile. And when we start taking the data and we start putting this data into context, the signals down at the lows, what is that telling us? Why do we not want to be looking at sell signals trying to take this out? Because that could be a potential attempt for a breakout. What about the signal that came up here at this high? I mean, it's a lower high off the range, but it's still a signal near resistance, right? That's the things that we can start using order flow to really start putting power in our side. And when you start really kind of understanding why that's important, that's when you can start leveraging the simplicity of order flow. And if I can leave you with this, I think what's really powerful is that we keep it simple. Signals, very powerful. Trap traders and combined signals are the most powerful signals you can use in here. Net delta, super powerful. Using the order flow is good if you choose to see it. A lot of traders are going to come in here, turn the numbers on, turn the dots on, and use the visuals. And they're going to rely on the visuals to see that in the tape. It'll keep it a lot cleaner and a lot easier to see. Now on the ES, you can set the thresholds to be different. Obviously on the ES, there's a lot of volume. I personally don't like to have so many dots on my chart, so I would increase it to 3 or 4 times the threshold. So if I go in here to the strength of the imbalance, and I go in and we adjust that, bar display, indicator display, and we go in here to print display. Let's go and find this. And let's go and find that. Threshold, zones, imbalances, multiplier right here. Let's say I want to do it at a 4 times multiplier. It's going to reduce the amount of dots you see on your charts. Maybe we need a little bit more. Maybe you want a 5 times multiplier. We'll go in here and we'll adjust it. Maybe you want a 6. And you have the ability to come in here and adjust the strength of the imbalances to make them less responsive. Now take a look here. There's a lot of selling coming in on these bars. That means that the strength of the selling into that bar was really, really powerful. And also knowing that the strength of this is now at 6 times the threshold, and we start to see adding a zone to that, you start paying attention to when supply and demand is created from very strong imbalances. That's when you can start putting a lot more emphasis on the supplier demand levels because they're created from much bigger impact, okay, at the right locations. So let me ask you this. Did you learn anything from today? Did anybody here learn something new? Based off of the information that I gave you. The important part is whether or not you learn something new when you attend these types of events. Byron did. Adam says yes. Felix? You'll have to rewatch it a couple times, Brian. Absolutely. Terry says, I like to keep it simple. Thank you for keeping it simple. Great stuff. What I've learned is traders already have enough to do in terms of keeping trading under wraps, right? And what's really nice is that once you learn it, it's really about when you apply it. And the way I always do things is I like to do things to keep it simple. So I'm going to give you a little cheat sheet, because I like to do that. Okay, and we're going to call this the order flow cheat sheet. Number 1, net delta trumps individual price aggression. Number 2, time and sales zones are only important at areas of interest. Trade signals are best at areas of interest, okay? Trap Trader and TDL/TDS are best. Delta divergence is too fast. Oh, you can change the text on that, Kevin. It's a setting. There's you do not have the wrong version. You just can go in and write. You could put lollipop in there and it'll read lollipop. Right? It's a setting that we've put in there. You can change it. Some people like to just put PL because they don't like the wide graphics. If you got a bunch of other indicators on the top. I like to just put L in there because it stands for lean, and this is the final version we've made to be lean, which is nice. Okay, so let's talk a little bit about aggression. Aggression measures time and sales. Set this to a minimum of 3+. Okay. Set the trap traders to minimum 3 sequential declines in volume exhaustion. Okay. Let me ask myself a couple more things. Give me a second here. I know I had a few more in my brain here kicking it for you. Let's talk about keeping it simple. Order flow happens all over the place. We only concern ourselves with area of interest, and when used in confluence with other indicators. And the last one here, very important, I put extra stars. If you only trade order flow and rely on the inventory, time and sales, and print aggression chart, then stick to this and only this, as it requires a skill set of its own. Okay, and this is just me on, you know, this is one of our biggest products that we sell in the company. It's one of the biggest sellers because it's an all-inclusive environment. Now, here's the thing. This is the order flow cheat sheet. I have one for micro volume profile tomorrow. Coming mañana. A little bit of Spanish for you. Okay? Coming mañana. So the reason this is important is I want to tell you a little bit about the reason why we break this into a 2-day summit. Okay? How many of you guys felt that was a whole lot of information to take in today? Que bueno. Give me a yes if you found that it's like a fire hose, right? Got print and we got zones and we've got signals and we've got tape, and it's a lot, right? So we got to take it in, and our brains only learn at certain speeds, right? We got to take it in and be like, God, the Sean guy just keeps throwing stuff at me, right? Well, I want you to know this, so that when we built the tool set, what I did was I studied all of the platforms, all of the other vendors, and all of the other order flow tools that were in the available space at the time, and all of the volume profile platforms, and all of the volume profile studies, and all of the other things that are available in the space. And what I found was that there was just so many tools out there that you had to buy like 1 or 2 or 3 and all of these different indicators to be able to do it. So I said, why don't we just build a print profiler that does all of the order flow requirements that we need, plus all of the volume profile that we need on a micro and a macro level. So what I did today was I went through all of the order flow. I went through all of the print, the volume data, the imbalances, the trade signals. We did not go into delta spread analysis because I do that on an independent event, which we've had in many times before. I went over the inventory and we went over the zones, okay? What I'm going to do tomorrow is I'm going to go over bar volume profile, profile composites, developing profiles for back testing, understanding manual drawing of profiles, volume averages, and how we bring this all together for what I like to feel like the only order flow and volume profile tool that's absolutely necessary for entry charts. Like there's a lot of great stuff out there, but for me personally, I just wanted it all in one environment. So if you're somebody that found this interesting and you think that it's something that you can benefit from, here's a cheat sheet. Let me save that so that we can use it tomorrow. Order flow and volume cheat sheet, and I'll put Summit. Okay. Perfect. And I'll keep that for you guys tomorrow. The bars at the bottom are the delta spread analysis. So that is a complete separate integration for just delta. And we've had webinars just on delta spread analysis because it's an independent discussion. And so if you're interested in just learning about the deltas and what the delta spread analysis is, we have webinars, lots of them on it. So just send us an email, Robert, and we can get it over to you. Because I find that the delta spread is a completely different discussion because it only relies on volume and delta strength by itself. And it's a webinar on its own, right? This is like buying a Maybach, right? And then putting the Ferrari inside of it. Okay. So a couple things here, guys, just to kind of summarize everything we've done. If you found this informative and you like what we've got here, as always, join us tomorrow. I'm going to give you a link for the print profiler software for anybody in here that would like to save some money and invest in themselves on using this tool. I put the link in the chat box. Okay. It's a pretty good discount. It's almost pretty much half price. And you get it for 2 computers, unlimited support, usage and settings, videos, and training. Let me kind of go in and show you the training videos on this and where you would locate this. What I do want to make note of is that we are doing an event tomorrow, and you'll get an opportunity to see the other side of the indicator and what it's doing. But if you like the order flow side, the link is in the chat box. The event for tomorrow is here. You do not need to register. You are already registered because you are here. The fact that you've been given this link and you joined us, you're already in the list. You'll get it, and you'll get all the follow-up emails and all the details, okay? Tomorrow, we're going to go over micro, macro volume studies, cluster analysis, 2 and 3 bar volume cluster patterns, volume averages, volume divergence, and profile composites, okay? It's a master's degree in volume profile, all right? And what I'd like to do is I'd like to show you that when you do get the tools, or when you do use the tools, or you decide to purchase these, I'll just show you exactly what the process looks like. And so you'll get an email and you'll be given a username and a password. Many of you guys probably already have one if you're members of the trade room or whatnot, or other indicators. And you're going to have a My Software tab. So you're going to find the print profiler is down here somewhere. Right there. Okay. And when you come in here, the zip files are here. Licensing instructions, order flow, and usage and settings. So this is important. I filmed 2 different training videos on order flow, usage, and settings. And then I filmed a video on volume profile. Okay. There's a user documentation here as well. And obviously any webinars and trade room recordings and stuff you'll have access to if you're a member of our programs anyways, right? So please note this, that it is very comprehensive. It'll take some time to read it and understand it, but it is very valuable. And once you learn how to read order flow and data like this, then you'll definitely be in a better place than you were before you knew it. Robert wants to know if delta spread analysis is in the members area. It is in the user documentation, and we're actually adding more to it. We have a new user manual coming out very soon. But I'll make sure, Robert, if you just send us an email, I'll get Ashley to send you any links and videos to those. Okay. So once again, Jerry's asking, can I use TradeStation with this indicator? Not yet. Not yet. Eventually, someday, we'll have all of our products over there, possibly. Not sure yet. Some of the coding language is quite difficult on their platform. It's, being able to realize that some tools are available to us through the benefits of Ninja's platform. It's one of the reasons why I love Ninja so much, is because their development, they're very developer friendly and they're very customizable. TradeStation's been around for a long time and they're a great platform, great group of guys over there, but I find that a lot of our indicators are very advanced. So it just depends on the code language and the restrictions. And it's, so if you are using TradeStation and you would like to use this, you'll definitely need to get access to Ninja. I use the volume. Iqbal is asking, you did not use Orderflow during the trading session today? I used the volume. So I used the volume data that's coming tomorrow. Yeah. Absolutely. So is there any other questions that I can answer for you guys with regards to Orderflow? I want to thank you guys for being here. Thank you for your attendance. Appreciate all of the like-minded traders. Did you guys enjoy the event? Give me a yes, no, maybe so. Feedback's always welcome, but more importantly, I look forward to seeing you guys tomorrow morning if you guys are trading with us. Frank, we're going to send that Orderflow cheat sheet out tomorrow after the event, because I'll have all the rest of it. Terry, not a problem. Derrière. Excellent, guys. Take care, traders, and we'll see you bright and early tomorrow morning for another kick butt session in the markets. Let's crush the markets this week and then end for a great holiday. Take care, guys, and we'll see you tomorrow.